Hey everyone, welcome back to Corporate Decoder, the place where we decode the alphabet soup of corporate filings and figure out what all those numbers actually mean for the companies we care about. Today, we are diving into Lafayette Digital Acquisition Corp. Its latest report, and let's just say this one is all about a big beginning. So, what is Lafayette Digital Acquisition Corp up to? Well, they have just completed something called an initial public offering, or IPO. Think of an IPO as a private company deciding to sell shares of itself to the public for the first time, essentially becoming a publicly traded company. This report is all about the details of that big event. This company, Lafayette Digital Acquisition Corp, is what is known as a special purpose acquisition company, or SPAC. These companies are essentially shell companies that go public with the sole purpose of raising money to acquire another existing company. So they are kind of like a blank check for a future acquisition. Now let's get into the nitty gritty of this IPO. They sold what they call units. Each unit is not just a simple share of stock. It is actually a bundle deal. You get one Class A ordinary share, which is like a regular piece of ownership in the company, and then you also get a quarter of a redeemable warrant. A warrant is like an option to buy more shares later at a set price. So it is a package designed to get investors in the door. And where are these shares trading? They are listed on the Nasdaq Stock Market LLC, which is one of the major stock exchanges in the United States. This means the company's shares are now available for anyone to buy and sell on the open market. The financial heart of this report lies in the details of this IPO and a related private placement. Lafayette Digital Acquisition Corp. has successfully raised a significant amount of money. They sold 287,500,000 units for $10 per unit. That's a lot of units, and at that price, it brought in a cool $287,500,000 in gross proceeds from the IPO alone. On top of that, they also had a private placement where they sold an additional 760,000 units at the same $10 price, bringing in another $7,600,000. So in total, this company has brought in a hefty sum of over $295 million. Now, what happens to all this money? A very significant portion of it, $287,500,000 to be exact, has been placed into a special trust account. This is standard practice for SPACs. The money in this trust account is essentially set aside to be used for the future acquisition. It also shows that a significant amount, over $10 million, was set aside for underwriting commissions. This is important because it means not all the money raised is immediately available for the acquisition. A portion is accounted for as fees. This report includes an audited balance sheet as of the 12th of January 2026. A balance sheet is like a financial snapshot of the company at a specific point in time. It shows what the company owns, what it owes, and the owner's stake. For this SPAC, the key takeaway from the balance sheet is the massive amount of cash and cash equivalents held in that trust account ready for the next step. So what does this all mean? Lafayette Digital Acquisition Corp. has successfully launched itself into the public markets, raising a substantial war chest. They've done what they set out to do in their IPO phase. The real test, however, is yet to come. The company now has a defined period to find and acquire another business. The success of this SPAC hinges entirely on management's ability to identify a promising target company and negotiate a good deal. Looking at the broader picture here, this filing tells us that Lafayette Digital Acquisition Corp. is in a strong position from a capital raising perspective. They've got the funds to potentially make a significant acquisition. However, the primary risk for any SPAC is the execution risk of finding the right target. Management's track record in identifying and integrating businesses will be crucial. There is also the risk that they may not find a suitable acquisition target within their timeframe, which could lead to the dissolution of the SPAC and the return of capital to shareholders. The warrants also present a dilution risk for existing shareholders once they are exercised, but that is a standard part of the SPAC structure. In conclusion, Lafayette Digital Acquisition Corp. has successfully completed its IPO, setting the stage for its primary mission, to acquire another company. The financial foundation is solid with over $287 million in its trust account. The future direction and success of this entity will be determined by the strategic acumen of its management team in identifying and completing a valuable acquisition. Alright, that is our breakdown of Lafayette Digital Acquisition Corp. As latest filing, what is your take on SPACs in general? And do you think this company is poised for success? Drop your thoughts in the comments below. If you found this analysis valuable, please give this video a thumbs up. It really helps the channel, and subscribe for more in-depth corporate insights. Don't forget to check out our Discord community linked in the description. Thanks for watching, and we'll see you in the next Decode.